You know, in finance, headlines are supposed to tell you what's going on. But what happens when they tell two completely different stories at the exact same time? Well, back in 2025, one of Vietnam's top banks, ACB, gave us this fascinating puzzle. They had record-breaking growth right next to a pretty surprising stumble. So what was really happening? So look at this. On one side, you've got this huge celebration. ACB's total assets blew past the 1 quadrillion VND mark. I mean, that's a massive milestone. But then, on the other side, a totally different headline comes out. For the first time in 10 years, the bank actually missed its annual profit target. So how does that even work? How can a bank be growing its assets like crazy, but still fail to hit its profit goals?
So, was this a sign of some real trouble brewing under the surface, or was there maybe a deeper strategy at play? Let's unpack the real story behind ACB's numbers.
All right, first things first, let's really dig into the numbers behind this puzzling performance. You can see the shift right here. I mean, after a decade of just steady, consistent climbing, profit before tax fell from over 21 trillion VND to about 19.5 trillion. That's a 7% dip. Now, it might not sound like the end of the world, but for a bank on this kind of rocket ship growth path, it definitely got people's attention. It looked like a clear setback, but the question is, was it really? Well, it turns out this wasn't an accident, not at all. In fact, the bank's leadership called it a calculated setback. This was a deliberate choice.
And here's the chairman, Trần Hồng Huy, explaining the whole strategy himself. He said that back in late 2025, his team saw storm clouds gathering on the horizon. The economy was showing signs of slowing down, and that real estate market, it looked dangerously overheated. They worried that lending in that sector was getting way too risky, so they made a call: stop chasing short-term profit and start playing defense.
And they did this using a financial tool called a loan loss provision. Just think of it like this: the bank intentionally takes a profit hit right now to build up a massive financial cushion for later. It's a rainy day fund. They set aside a huge chunk of money to cover any loans that might go bad, especially if that real estate bubble decided to pop. So in short, they sacrificed their 2025 profit goal to build this fortress of a balance sheet for the turbulence they expected in 2026. So did the gamble pay off? Well, the early numbers from 2026 tell a pretty compelling story. It looks like we've got a rebound on our hands. And the results were frankly immediate. In just the first quarter of 2026, profits didn't just recover, they surged, up 17% from the year before. See, by dealing with all those potential risks ahead of time, they were totally free to just focus on growth when the new year rolled around. And that prudence, it paid off big time in stability too. Their non-performing loan ratio, that's basically the percentage of their loans that are at risk of not being paid back, was under 1%. At just 0.97%, it was one of the absolute lowest in the entire banking sector. So that financial cushion wasn't just for show, it created real, incredible stability. And here's the real kicker. You might think, okay, they played it safe, so they must have fallen behind the competition. But nope, they didn't. Their credit growth, that's the rate they're issuing new loans, actually edged out the industry average. So they managed to be both cautious and competitive at the same time. And let me tell you, that is a really tough balancing act to pull off. Now, this super strong foundation wasn't just about playing defense. It was the launchpad for a really ambitious expansion. With its core business totally secure, ACB is now looking way beyond its traditional strengths. For years, ACB was an absolute powerhouse in retail banking, for individuals and small businesses. And that's still a core pillar, for sure. But now they're expanding. As their small business clients grew into huge enterprises, ACB grew right alongside them, moving into corporate banking. And to complete the picture, they're building out wealth management and insurance to create a full-service financial ecosystem for every single one of their customers. So how do you power an expansion like that? Well, an ambitious plan needs an equally ambitious investment in the future. And these numbers are just staggering. We're talking an investment of 8 to 10 trillion VND. That's hundreds of millions of dollars over the next 5 years. And this isn't just for new buildings or hiring more people. This is for a fundamental technological overhaul of the entire bank. And this investment really shows you their true vision. They want to build a tech-first bank. They're pouring all that money into a powerful data and AI infrastructure. The whole goal is to deliver these highly personalized experiences and launch a new insurance business as an insurtech, using technology to make insurance smarter, faster, and way more accessible. So it all comes back to that initial paradox, right? That missed profit in 2025, it wasn't a failure at all. It was an investment in a stronger, more resilient future. It let them weather the economic uncertainty and perfectly set the stage for their next huge phase of growth. Which kind of leaves us with one last thought. In today's volatile economy, is ACB's strategy of taking short-term pain for long-term gain the new playbook for success?